knowledge is very key. If you want to do any investment, you need to know about the kind of investment you are going into. So that's a mistake I see people making, mixing their funds from their businesses with their personal funds. Yeah.
How can they avoid this pitfall?
Now, when we come to investing, there are different asset classes that you can invest in. I don't know if I'll be sounding too technical, but we have the money market space and then we have the capital market space. So in the money market space, you have investments that have a duration of 1 year and below. So you would have the treasury bills in that space. You would have fixed deposits in that space. So fixed deposits being offered by banks or by other non-bank institutions. So all those things would fall in the money market space. And then we have the capital market space. In the capital market space, we have debt instruments. So you'd have bonds, you would have corporate bonds, you would have like companies coming onto the market to be able to raise funding. And they give the opportunity for people to invest in those fundraising ventures.
Hi there, welcome to another episode of the 0 to 1 Man podcast. My name is Dzifa Mensah, Okpata, and I'm really excited to bring you today's session. Today, I'm in the studio with Ruth Fordjour. She's the head of fund management at GLICO Capital, and we are speaking everything money, how to get your money up, how to save your money, how to invest your money, how to think of your pensions, how to think of compounding your money, how to become a millionaire. Maybe not, but really we are talking everything money, and I can't wait for you to hear this conversation. So let's jump right in. Hi Ruth.
Hi Dzifa, how are you doing?
I'm great. How are you?
I'm well too.
Good to see you.
Very good to see you too.
How you feeling?
Excited.
Are you ready for the money conversation?
Yeah, I'm ready.
Everyone likes money, so
I'm ready. Yeah.
It's always a good topic to discuss.
Definitely.
Okay. Let's go back to tech. When you graduated with your actuarial science degree,
right?
Did you envision fund management as a path for you in terms of your career?
Not exactly.
Okay.
So just to give you a bit of context about how I grew up, my dad worked with the Ministry of Food and Agric, and so I lived in 7 regions in the then 10 regions of Ghana.
Yeah.
Moving from Ashanti to Brongahafo to Volta to, we went to so many places. And for me, I used to see my dad working with multilaterals like USAID, the World Bank, COICA, JICA, all the international agencies and all of that. So I would see how the work in those international organizations would directly impact the livelihoods of farmers and other people, like generally how your work impacts people.
Yeah.
So for me, I always thought that I would work in a company like the World Bank or any of these international organizations. So I didn't really set out to do fund management. And then, so that's like more when I was a child. And then getting into the university, I decided that, I wanted to go into consulting as well. So I wanted to end in the multilaterals and the international agencies, but I wanted to pick up some skills from the consulting space. So in my 3rd year, I took an internship with KPMG.
Okay.
And I really loved the experience. And I was with Deal Advisory. So that's also sparked up some interest in finance as well. And fast forward, I graduated from KNUST with Actuarial Science degree, and I found myself in fund management. Yes, so I didn't really set out to specifically go into fund management, but I just knew that I wanted a job that would directly impact people, people's livelihoods, and all of that. Yeah.
So in your first year as an investment analyst, what skills did you have to acquire quickly just so you could do your job well?
Right. So like, because I mentioned that I wanted to go into consulting, actually when I started work in my fund management role, I had the opportunity to interview for the consulting role that I had applied for, and I was so sure that I was going to leave fund management, and I didn't get a yes to the consulting role. And so then I had to set myself into the reality of accepting my job in the fund management space. And for me, I would call myself a very resilient person, and also not dwelling on lost things for too long. So just really coming into terms with reality, I sat down and I asked myself, what does this job require me to do? And I work with this philosophy that everything worth doing is worth doing well. So at the time, that's what I found myself doing. As an analyst, I had to get into the job and really put myself into it. The skills that I had to learn in that period was knowing that everything that I was doing was impacting people, because we are managing people's pensions, people's funds. So if I make a mistake, it's somebody's future that I'm handling. So I learned ownership, owning what you've been assigned to, paying attention to detail. Because, for instance, if you have to input 100,000 investment for someone and you input 1 million, there's no way I'm going to find the extra 900,000 to pay back or something like that. So attention to detail was very crucial. And also, so I've talked about ownership, attention to detail, and thinking on your feet.
Okay.
Because there's so much going on. There's no room for you to now, what do I think? What should I? No, like right in the middle of situations, you need to be able to think and come up with solutions. Yeah.
You said it in finance. You have multiple certifications in various areas, right? Relevant to your industry.
Yeah.
How important is continuous learning for women who want to thrive and excel in their career?
All right. I think it's very important to upskill, especially in today's world. A lot of things are changing. Even in the field of finance, every day there's something new happening. There's new regulation all over. And so it's very important to upskill. And for me, it was very important I did that because I assumed a lot of responsibility very early in my career. I would go to rooms where, there are 40, 50-year-olds, and I was then about 24, 25. And you need to be confident. And you can only be confident when you have knowledge about specific areas, and you can also contribute to the discussions. Yeah, so very early, there are times that you would go for events and meetings, and you'd have people use all the jargons in the industry. And what I would do was to note them down. As soon as I come home, I'm looking at what this is, what that is, just try to understand. And the next time you find me using that jargon as well. Not just for the fun of it, but with understanding. Yeah. So the world is changing. Every career sphere is changing. So you need to evolve. You need to stay on top of issues. Yeah.
So now let's talk about money for the modern woman.
Yeah.
If someone has 500 C's to invest, where should they start from? should they even be considering investment?
You should.
Okay.
So the thing about investment is that it's not, I mean, the amount is important, but the habits is even more important because I think I'll be quoting scripture a bit. They say, to whom much is given, much is expected. And the whole the parable of
the talent.
Yes, exactly. So if you learn to save today, or you learn to invest when you are earning 500 cedis today, when you are earning 1 million, you would have built the habit to save. So it's more about the habits, or yes, building the habit of saving than the amount. If somebody had an amount of 500 cedis to invest, I would ask you to put it in. For instance, there are so many fund managers that have been licensed by the Securities and Exchange Commission in Ghana. There are a number of mutual funds around. You could also buy treasury bills. Those are the things that I would advise someone with 500 cedis to do.
So if I have 500 cedis and I start with a mutual fund, do I go back there every month to give an extra 500 cedis? Let's say I have 500 cedis every month to invest.
No. So you can top up with any amount you want. Today you can wake up and you want to top up with 20 cedis. You can top up with 50 cedis. The next time you have 20,000 and you want to put it in a mutual fund, you can invest in a mutual fund. What I must say is that knowledge is very key. If you want to do any investment, you need to know about the kind of investment you are going into. And so even for mutual funds, we have different types of mutual funds with different risk profiles. We have equity funds, we have money market funds, we have fixed income funds. So if you are somebody that cannot tolerate a little bit of risk, I wouldn't advise that you go into equity fund, for instance, because that is a fund that invests in stock. And you know, stock markets today, it can
very volatile.
Yes, and then it can also go, your money can actually also reduce and all of that. And it's very sensitive to information, to new appointments and all of that. So everybody needs to be informed about the type of investment that they want to do. If you're a risk averse person, I would advise that you go for a money market fund or a fixed income fund to put your money in. That way you know that the money manager is not going to toy with your emotions, your financial emotions. Let me put it that way. Yes. Yeah.
Okay. What are the biggest mistakes you see women make when it comes to savings and investments?
Right. Now I see a lot of women go into entrepreneurship, building businesses from scratch and all of that, even from a very early age. But the mistake I see people making is mixing the money that they make from their businesses with their personal money. And as women, you are in charge of the home. So for instance, you've made money from selling nails, for instance, and then you decide that today was on the menu. I think I need to top up with some 200 cedis, and you go into your business money. That is going to repeat on a regular, and in the end you'd realize that you actually don't have so much to show for all the work that you are doing. Yeah. So that's a mistake I see people making, mixing their funds from their businesses with their personal funds. Yeah.
How can they avoid this pitfall?
So first of all, it starts with putting in structures when you are setting up a business. Even if it's a sole proprietorship, you can set up a separate account. And in this day, you are able to register multiple accounts, even if it's mobile money that you want to use. You can register multiple accounts and specifically or dedicate one account for your business. Also tracking your expenses on the business, trying to keep your books, simple accounting for your business, just to see how much is coming in, how much is going out, how much you are making, and how much you are even paying yourself from the business, for instance. Yeah.
Still on the topic of entrepreneurship, many entrepreneurs do not pay their pension.
Themselves. Oh, their pensions, right?
Yes.
Yeah.
And I know that that's one of the things that you manage, like pension funds, right? How do you think that women and entrepreneurs can prepare for their pension, for their retirement?
Right. So there's a provision in the pensions law in Ghana for people in that category. You know, when you're in formal work, you have the tier 1, tier 2, tier 3, where you are doing SNIT, then your tier 2 pensions, and then the tier 3. For people in informal work and people running their own businesses, that provision is under the tier 3 of the pensions scheme. So what that entails is you can actually go to a pensions trustee or a pension fund manager, and then you open a pension fund, I would call it that way, or a provident fund, or some people call it a private pension scheme. So there you can open a fund for yourself, and on a regular, you make some contributions to your account held in that scheme. And that way, and another thing that I would add is for you to automate those contributions. Because if you have to sit back at the end of every month and now figure out all the expenses that you need to make, plus the payments that you need to make, you may end up just forgetting. So in a case like that, you can automate your contributions to your pensions, yes, with your provider. What I would add is that people can actually go to the Securities and Exchange Commission websites. You would have a list of all approved fund managers. You can also go to National Pensions Regulatory Authority to see the list of approved pension trustees. I work with GLICO Capital. We are a pensions fund manager, and so we offer that service as well. We also have a pension fund trustee. Yeah.
Okay. What's your personal investment philosophy? And how do you structure your own money so that other women can learn from?
Right. So my personal investment philosophy is not to put all your eggs in one basket.
Okay.
I mean, outside of investments, people even use that on a regular life basis. Yeah. So I don't put all my eggs in one basket. I try to have a balanced view of the kind of investments I want to have in my personal portfolio, in the portfolio for my family. So I would have very risk averse investments. So I would go for treasury bills or put my money in a mutual fund that is zero equity, like very risk averse, and also puts my money in businesses that I believe can bring in some returns. Yeah. So just having a balanced view in terms of risk and not putting all my eggs in one basket. Yeah.
Okay. So if a woman came to you today and said, I want to be financially independent in the next 10 years.
Okay. That's a very good place to start because it's important for you to come to that realization that you want to attain financial independence. Yeah. So what I would advise is you start now. You don't defer the willingness or the urge for you to attain financial independence.
Yeah.
What I would say is that first of all, you need to have a budget.
Okay.
People think that having a budget is for companies or people who are how do they even call it? Like pepe. Let me use that word. I'm sorry. Like for non-Ghanaian.
Yeah, I think Mensah.
Yeah, who are listening. Yeah, they say you're a Mensah or something like that. But it's not just for that. Everybody needs to have a budget, and you need to be able to track your expenses. So it all starts from that side. Having the thought that you want to attain financial independence, having a budget that you go according to. I mean, it's okay to go outside your budget a few times, but in a broader sense, you know what you are spending on, tracking your expenses to see what you are spending on that you need to cut down and all of that. Yes. And what I'll add is that you should also consider insurance, because life is not promised. Today, you may be full of life and everything, but the next day, anything could just happen. But you have a family who would need to progress in your absence, or in case you have a permanent disability or something of the sort. So if you have a life insurance, for instance, or a workman insurance, which is to give you some form of cushion in the event of these conditions I have mentioned, it would help to cushion your family. Yes, so tracking your expenses, having a budget, starting now, not deferring your plans, and actually putting money in an investment. So you also try to be regular. You don't just do one day and then you forget. You have to be consistent. You have to be consistent. And there's also the power of compound interest. Yep. And so if you invest today and you think that, okay, you don't really want to invest, that money is going to grow anyway. But if you had been more consistent in contributing, you would earn a much more return than you would when you start your investment and you leave it. So those are the things that I would advise anybody who wants to attain financial independence.
There's a difference between savings and investing. A lot of people would usually save money at the end of every month and say, I'm putting 200 Cs aside, every month. Now, one thing that we have seen happen in recent times, I think even as at last year, was the depreciation of the cedi and also general inflation. I think at a point, maybe not last year, but the year before, inflation rose to about 42%, if I remember correctly. And there's still people who still use like susu boxes or just very interesting ways of saving money in a bid to cushion themselves for the future. Are they doing the right thing?
Right. Okay. So there's a difference between saving and investing, and each of them have their place. It is advised for everyone to invest for the future. Savings only comes in when, for instance, you are just saving for an emergency, and it is required that everybody has something we call an emergency fund. So an emergency fund is some money that you set aside in the event that you lose your job or something unexpected comes in. You don't go around knocking on people's doors and begging them and all of that. So that's the role that savings plays. But if you want to set aside money for a longer term use, for medium term use, it is advised that you invest. So savings would normally not grow your money at a compounded interest. An example is just having a regular bank accounts. You'd go and open an account and they'll ask you, do you want to have a savings account or you want to have a current account? For a savings account, the interest on it is really not much. I mean, they are even doing you a favor because ideally, I mean, let me use my words advisedly, but for a savings account, really, they are just doing you a favor because it's not an investment, right? And so for the people who use their susu boxes, in their minds, they are saving. That should be something just for an immediate use. But even that's, I don't think it is very safe because I remember as a child, I had a susu box one time and I think I lost it or something. And I really, really cried that day.
I'm sure someone took it.
It's not safe. You can just have your whole savings wiped out in the event of a flood or fire or something. So you need, even if you are saving, you should put those funds in a bank account, in a savings account. Now, when we come to investing, there are different asset classes that you can invest in. And I don't know if I'll be sounding too technical, but we have the money market space and then we have the capital market space. So in the money market space, you have investments that have a duration of 1 year and below. So you would have the treasury bills in that space. You would have fixed deposits in that space. So fixed deposits being offered by banks or by other non-bank institutions. So all those things would fall in the money market space. And then we have the capital market space. In the capital market space, we have debt instruments. So you'd have bonds, you would have corporate bonds, you would have like companies coming onto the market to be able to raise funding. And they give the opportunity for people to invest in those fundraising ventures called the bonds. So still in the capital market, you would have the commodities market. Actually, in Ghana, we don't really have a very developed commodities market, but outside you could go into there are specialized products in that space that people can invest in. So let me just come back to what we have in Ghana. You have the bonds, you have the corporate bonds, you have the government bonds, and you would have currencies as well, FX. So FX is also in the capital market space.
So are these things that they can invest in?
Yeah, so these are things that you can invest in. What you would need to do is, that's actually the role of investment advisors. So investment advisors would guide you as to what investment opportunity is right for you, for your risk profile. What kind of returns are you looking for? Are you looking for income or capital growth? Income in the sense that on a regular, you want to be able to draw on your interest to be able to maybe fund your lifestyle or to do something else. But there are also people who are looking for capital appreciation. They just want, maybe you have an inheritance somewhere and you just want to see it grow, or you just want to save. You have some money that you just want to appreciate in value. So we would call that the capital growth or capital appreciation. Yes. So that's a role fund managers play, or that's a role that investment advisors play, helping you to choose the right investments that fit your investment goals.
When people hear fund managers and investment advisors, they think that it's just for people with a lot of money to invest. Are there fund managers who attend to people with, say, 1,000 cedis or 10,000 cedis who want to start investing?
Exactly. So that's the role that fund managers are supposed to play. And that's a mandate that we've all been given once you're operating in Ghana.
Okay.
I mean, there are different categories, the high net worths and all of that. But we provide services for every person, regardless of the amounts that you have. And so if somebody walks to me Or for instance, if we have a float in a school and a student walks to me, I should be able to advise the student on how they can invest. And most of the time, some actually have a lot of money, but you also have people who don't have so much. Maybe they have 100 CDs, they have 200 CDs to invest, and you still give them the advice.
When should people start investing?
Now, you should start investing like now, as we speak. You shouldn't wait till you are too old. Well, I get your question in a sense that maybe there may be a child listening to me and you are not making any. Yes, so definitely you can't invest what you don't have. But as soon as you start making some money, or even as you start receiving gifts, you can start investing. For me, I started investing. I remember I was in my second year in the university. I used to get like semester stipends from my aunties and my uncles. So I would put all of those together. And I remember walking to it's a commercial area in KNUST, opening an account with one of the biggest banks. And I think I bought a treasury bill of 1,000 CDs at a time. And when I was going to do my master's, no, it was just from gifts. When I was going to do my master's, I actually added that investment to the funds I was putting together.
Love it.
So once you start, it would pay off. So it's very important to start investing.
Building
so I contributed to funding my master's degree outside.
There were people who had investments, and I think the last year or the last 2 years, there was a haircut. I think that maybe one of my funds was, I don't even know, because I just gave up on it. But a lot of people were affected. They did the right things. You said we should invest. We are investing. You said we should, like, whatever you asked us to do in order to become financially independent. We did that for years. And then suddenly government policy just took almost all of the money that we had worked hard to invest and to earn, the interest that we had earned over the years.
So actually what happened in Ghana, I wouldn't say it's unprecedented, but it actually beats what we learn in theory and what exists elsewhere in the world. So ideally, government investments are labeled as risk-free. So there is not, you have that confidence about government securities that there's no way government is going to default on investment instruments that they have issued. So I mean, for us in the financial space, it was like, there are actually formulas where the risk-free interest rate is the prevailing government rate. So it's like, what is happening? Do we have to unlearn what we know, or like, but looking around in the continent, we had another country in the Central Africa thereabouts also experiencing something similar in the past. So it's not really like it's unprecedented, but I would say that it shouldn't have happened because it degrades the confidence that people have put in the government as an institution, and also for financial intermediaries like us, the banks and all of that. It wasn't just the haircut. It started with banks having to be closed down, fund managers having their licenses withdrawn, closing down in excess of 400 microfinance institutions. The whole cleanup really affected the trust people have in saving and investing. So I identify with the loss of confidence in the system. But I would still advise people to invest in this modern day. You just invest wisely. like I said, what happened shouldn't have happened. If you check the history of Ghana, it's taken us a very long while to get here, and we as a country should ensure that this doesn't happen again.
I
Yeah.
like that. We as a country need to
Yes,
ensure that.
exactly. It doesn't really lie in our hands, but
Exactly. That's what I wanted to say. Like
it doesn't lie
it's not in
in
our
our
power.
hands, and it doesn't lie in our power. But what happened shouldn't have happened. I cannot answer for why it happened, because I believe that those who took the decision at the time had their own reasons. But ideally, investing is a good thing. You never know what the future holds for you. And so you just have to make sure that you are doing it right, and you are consulting the people with the right information to help you make a good decision. And like I said, if you are doing what you need to do, so for instance, not putting all your eggs in one basket, this is a fundamental advice that even applies outside finance. So in the case where there's a government haircut, you would have investment in some other assets that would not experience a haircut. So I'll advise people to invest, but most importantly, make sure that your investments are diversified. Yeah.
What do you think about the idea that for economies like Ghana, which are quite volatile,
It's very volatile.
thank you. The best type of investment is, for people who do not have a lot of money, is to keep their money in Forex.
The thing is, you use the word volatile. So FX. Very recently in Ghana, we've seen the trend.
Yeah.
So last year, the cedi was depreciating for a while, and then sometime early this year, we saw that the cedi really appreciated, becoming the best performing currency in the world, gaining all the attention and everything. And just in the last
week
2 weeks, like a week or two, the cedi is also coming down again. So in Africa, we have very volatile markets. Like, you can't be so sure that, the cedi is performing, so let me go and put. So like I'm saying, the key is diversification in a volatile market, because you don't know what the future holds. So you just need to make sure that you diversify your investment so that one shock doesn't shock you too much.
At least you have some shock absorbers somewhere.
You have some shock absorbers in other securities that you may have invested in. Yeah.
Okay. Before people start investing, do you think that they need to fund their emergency wallet first before they think of putting money for the future? Emergency fund is for the future, so but you get what I mean.
Yeah, I get what you mean. I think so. You could have two approaches. It's important to have an emergency fund, and people would normally say you should have like a 6-month cover. So for instance, if you are earning 3,000 cedis, for instance, you should have about 18,000 cedis as your emergency fund saved somewhere in a savings account that you can easily have access to in case of any emergency. You have to pay for some bills and all of that, you fall on it. And at the same time, you are also expected to invest for your future. So I would say that two approaches. You can choose to do the emergency fund route if you don't have so much access to funds. But if you do have, if your income flow is a bit steady and you are able to save and invest at the same time, you should do the two. So you are building your emergency fund, and then you are also putting aside some money towards your investment. Yes, I would say that.
What are must-haves? What funds are Like, what are must-have funds for every woman in
Every
addition to
woman.
the emergency fund?
Okay. I would say pensions.
Okay.
Saving for your pensions, because everybody's going to retire.
Mm.
Whether you're doing your own work or you are in formal work, you should have a pension fund that would help you to relax. It's not in your pension that you are going knocking on your children's door that I need this and I need that. Yeah, so you should have a pension fund. You should have, as women, I mean, it depends on how you want to do it, but you should also have an educational fund.
Okay.
For your children, for your kids, and even for yourself, to be able to upskill, to take up courses and all of that. So it's also very, very important. A pension fund, an education fund, an emergency fund, which you've already mentioned, and generally an investment that you are building towards the future. It could be your medium term future. It could be a longer term. So if I say medium term, I mean, for instance, maybe 5 years. You have a certain goal or ambition that you are working towards. So you have a fund specifically towards that. And then for the long term, you also have an investment towards that, whatever goal that you want to achieve. Yeah.
So that leads me to the question, should we invest towards a goal, or we should just invest because as human beings, you need to invest?
It depends. For me, I don't like to go with this has to be the case, this has to be it. You just do what works for you. So it could be that you have a goal. It could be that you don't necessarily have anything figured out yet. But what is important is that you are investing. Whether you have a goal or you are goalless, you should invest.
Okay, so let's end with rapid fire questions.
Okay.
Are you ready?
Yeah.
3 things every woman should do with her money this year.
Okay. 3 things every woman should do with their money. You should plan.
Okay.
So plan what you are going to do with their money. Otherwise, the next thing you know is
money is gone.
It's gone. Yes. So plan, prioritize what you want to use your money for. So there are so many needs at every point in time. You need to prioritize what matters most to you, what is a need and what is a want. So you need to prioritize what you should do with your money. Plan, prioritize, and track.
Okay.
Track your expenses. Sometimes you'd have a plan, you'd have a priority list, but you still realize that you don't go according to it. And so you should learn to track what you did. Just a way of reflecting on your actions and seeing what learnings you can get from it to make you a better person.
Okay.
Yeah.
Okay. Next question. 1 investment to absolutely avoid.
Ponzi schemes.
Like
yes, there are so many
one
around
that comes to mind. There was one that took the whole country by storm.
There are quite a number actually. And the Bank of Ghana is always issuing notices to people. I don't know whether it doesn't get publicized enough, but people always fall prey to these Ponzi schemes.
It reminds me.
I mean, or let me call it get rich quick schemes.
Yeah.
So for instance, they'll say bring 30 CDs and they'll double it to
bring 30 CDs, they'll give you gold, and then later you get 200 CDs.
Exactly. Like those are red flags, or now people call it banners. So like it's actually a red banner. Yeah. So you should be on the lookout for get rich quick schemes.
Okay. Best financial advice you've ever received?
It would be to start and not wait. Yes. So start, build, be consistent, and then diversification.
Okay.
Yeah.
Thank you so much.
Thank you.
Thank you for tuning in to another episode of the 0 to Woman podcast. I hope that you got your notes on money, on investment, on savings, on all the funds that you should have, and how you can become financially independent in a number of years to come. Do take care. Subscribe, like, share, follow, and I'll see you again next week. Bye.